Hi guys, you're welcome to Club 9. My name is Olahari and today we are talking about money management. Now, you see, when it comes to trading, this is one of the first thing you have to put into consideration, okay? A lot of people have money and they don't know how to manage it when it comes to trading. And trading is not your friend. Okay, it's like you want to fight an enemy. The money is in the mouth of the lion. You want to bring it out. Okay, and it's not just a free ride all the way. So you don't have to go all in. If you have $1,000, don't go all in. If you have $100, don't go all in. So I will explain money management for spot traders. I'll also explain money management for futures traders. For futures traders is a bit different, and for sports is also a bit different, right? Now, this is the difference. For sports traders, you are only using your own money to trade. And for futures traders, you are using your money and leverage, borrowed money to trade. Okay? That's just the difference. Now, if you have your own money, how do you manage your money? And don't forget that for leverage, the money you borrowed from the broker or the exchange, they are not ready to lose their money. So they already, the system already fine-tune if the trade go against you, how you will lose your own money and not their own money. Okay, so your money is used as collateral to the market. Okay, so the more collateral you have, then the more you the further your liquidation price, and the less collateral, the closer your liquidation price. Okay, that's how it works in a nutshell. But let's quickly go right in and let me show you how to manage your money when it comes as a spot trader now. Okay, so I will go to my board. Okay, so let's come here. So let's open a new page. Okay, beautiful. Now, for spot traders, you have $1,000. This is all you have, right? If you have to trade, because you're only looking at one direction, that's you buy low and you sell high. That is the only way you make money. The other alternative you have is dollar cost averaging, because dollar cost averaging will help to reduce, to bring your average price closer. That's your entry. Okay, so if you buy Bitcoin at 20,000, you are hoping that Bitcoin will go to 21,000. Okay, now Bitcoin drops to 19. Let me clean up. Okay, so Bitcoin moved to 19,500. You see that at this level you are in floating loss. Okay, and Bitcoin continue to hit down 19,000, continue to go down, right? Now, what happens if you do dollar cost averaging? If you add more money to the trade, okay, depending, either you're using robots or you're using it and you're doing it manually, it will change your entry. Your entry is 20,000. Your entry will now come to maybe 19,800, depending on the amount that you had. The calculation will be done automatically. So that is how dollar cost averaging works. It changes your what entry. Now, when it comes to managing your money, now if you're using, when you want to trade, you need to learn all it takes to become a profitable trader. Okay, it's not just something you will just move into the market and start trading. No, it's not like that. Now, if your win rate is 60%, then you are on the advantage side. Okay, so this as it is, your $1,000, your advice to trade maximum 2 coins at a time. In short, I personally, I'll probably even recommend just one coin. As a profitable trader who knows what he or she is doing, then you know your entry, you know your exits, you know how you move your money, you know how all your strategies is on point, though you have losing trades. Okay, and now as it is, make sure you don't use all your money to trade. Just for per trade, you can use just 20%. Okay, recommended, and that will be $200. Okay, so that is okay per trade. in as much as you are profitable. Because when it comes to, there are some trade will hold you down for a while, because spot traders believes that they're not supposed to, they're not supposed to hit stop loss. They don't have stop loss. You understand? So instead of them losing this money, okay, they will rather do dollar cost averaging with it, okay, so that their entry price can change. Because if this market go against you, you are expecting that market should come back here before you make profit. But if you do dollar cost averaging, market do not need to get to this 20,000 before you start making profit. That's the difference, okay? Now, so don't forget, as a spot trader, I recommend 20%. One coin, just one coin. I recommend 20%. If you have to be greedy, which is human, then you can just go for 2 different coins. Okay, that's okay for you, for spot traders, right? Either you're using robots or you're using direct from the exchange, whichever way you want to use. So that is all for that. Okay, now for futures trader is a bit clumsy. Okay, now money management it has a lot of things involved, right? Your own capital, your leverage capital, which depends on the number of X you want to use. You know, in cryptocurrency, we use X, right? So if your capital is $100, now you are hoping that if you want to do 1X, okay, that is 1 times 100, that's 100, okay? If you do 5X, then this money will become 500. Okay, if you're using 10x, you know your capital is $100. Let me box it. Okay, so if you're using 10x, then you're looking at 10 times 100. Okay, that will be $1,000. That's the amount you're going to be trading with. This will be your leverage. Okay, then if you're using 20x, it goes on and on and on like that. Okay, then your balance will be what? $2,000. Okay, now this money, how do you manage it? How do you manage this? So I already have I guess I have a recorded. Let me just open up so that I'll just use it to explain money management. So this is it. So for futures, we have $500 capital. That's the capital you're going to use. Leverage 20x. You don't have to use 20x leverage, but I will explain how it works. Trading capital will be $10,000, okay? Because you have $500 capital and you're using 20x. So if you times it, to give you $10,000, okay? Then trading capital, use only 20%. That means 20% of 10,000, which is $2,000. That is the amount you're going to be exposing to the market. Okay, so let me open my Binance. Okay, yeah, so this is my Binance account. So I will go in accordance so that you can understand my explanation. Just follow me, please. So here I have a video that explains cross and isolated margin. So please watch that video. It will really help you to understand how it works. Okay, because you this isolated and cross determines how you want to choose your collateral. Either you want to use the whole of your capital as collateral when you're trading, or you want to use only your margin as collateral when you're trading. Okay, if you're using your margin as collateral when trading, your liquidation price will be very, very close. Now, if you're using cross, then you're also using your capital as collateral for your trading in case the trade goes against you. So most of the times, if you have enough collateral, your margin, your liquidation price will be very far, sometimes 30% away from your entry, sometimes 50%, sometimes 100%, depending on your balance, your capital balance, okay, that you bring to the market. So that's how that works. So I won't talk on that. If you want to understand how cross and isolated margin works, then go and watch that video, please. I will also put the link in the description below so that you can watch. Now here, I only have $42 here, for 42.9. That's approximately $43. Now I'm going to use 20x. Okay, for example, I'm using 20x. Okay, yep. Now, one thing about me is this: when it comes to features, is that I think it is not about the leverage. Okay, it's about the amount you are exposing to the trade, right? Yes, that's the what matters. I don't think the leverage really matters a lot, because I'm going to show you the difference. Let's quickly go through that. Now let's come to market. Now here, now I'm going to be using already my leverage. That will be 43 times 20. So it's going to give us 850. So this is already, this is my leverage now, leverage amount. Now out of this amount, okay, now before I even explain all this, let me quickly give you a shot. Now look at this. Now I said out of $10,000 leverage fund, I'm going to be exposing just 2,000. Okay, so out of this 2,000, there's let's check. Okay, well, maybe because I don't have that amount in my wallet, so we need to know how much of my own fund is involved in this 2,000, because this 2,000 carries the leverage money and my own money. Okay, yeah, so let's quickly check that. Now here we have, I have about 851 to trade with, so let's say $100. So let's check it out. So out of $100, I'm going to be exposing my own money. Out of this $42, $5 will be going for the market. Okay, so understand that out of now the amount I'm using to trade this trade, the amount I'm using is $100. Okay, but my own capital involved, I'm using leverage. My own capital involved is just what? $5. So that simply means I'm using $95 leverage. Can you see that? Now, so if I'm using isolated, my $5 is the collateral that determines my liquidation price. Now, Binance will give me room to increase that collateral. They'll give me room. That, okay, if you think that you still want to maintain this trade, you can increase from $5 to $10. Then they will shift your liquidation price a bit further away from your entry. Okay, but that gives you more time to like watch the trade and see if it's still come in your favor. So that's how it works. Okay, you can see how much from $100, how much I'm exposing to my trade. So I guess let me confirm, I don't have up to that amount. Okay, so if I'm using $2,000, I'm going to be exposing $100 of my own capital into the trade. Can you see that? That's exactly how it works. So here I'm trying to let you understand that if I'm trading with $20,000, I'll be exposing $100 of my own fund. You see that? So that's how it works. Now moving forward, you need to know your ratio when it comes to profit. Is it 1:3 or 1:2 or 1:1 ratio? 1:1 ratio is not advisable, because at the end of the day, if you take 10 trades, if you can't win all, then that shows that even if you win, even it's going to be 50% win rate, you will not be in profit. Okay, but we're going to do that later. Now here you can see risk amount $20, profit $60 if you're using ratio 1:3. Now trading slot, now we always advise that, okay, even this $2,000, don't go all in. Okay, so you can divide this $2,000 into 20. Okay, that shows that you have $100 per slot. So as the trade goes in your favor, you can be adding more money. So I will still do another video that talks about stacking, how to stack your trade as the trade goes in your favor, how to add more money, keep adding money and all that, something like that. Okay, trading slot 20, then 100 per trade. You see that? Then five will cost $5. That's the amount that's going to be removed from your wallet. Okay, then we also have 20x. Now for 20x, if you're using 20x, 1% from your trading view, let me show you. 1% from your trading view. Yeah, so here this is BTC. Okay, so it's loading up. I hope my network is not too poor for this to come up. Yeah, it's coming up. Okay, so if I use my measuring tool, Okay, let's see, it's coming up, it's coming up, it's coming up. Okay, all the drawing tools are taking time to come. Okay, we're waiting. Yeah, it's back, it's here now. Okay, so this is price range. So from here, if we measure from 20,000, okay, to 2,500. Okay, let's just measure, like, let me just zoom this so you can see well. So let's just measure 2%. Okay, so from here up to here. Okay, that is 2%. Yeah, 2%. Can you see? So this 2%, if you're using 20x leverage, 2% is 40%. So when you're trading, you will see the way the percentage will move. You understand? You see the way it moves. Yep. So 1%, if you're using 20x leverage, 1% like this. So from here to here, that's from 20,000 to 2,200. That is 1%. Okay. So if you achieve that, that will be, in your trading, that will be what? 20%. 2% will give you 40%. 3% will give you 60%. Then if you're using 10x leverage, 1% will give you 10%, 2% will give you 20%, 3% will give you 30%, and on like that. If you use 5x, the same thing. So you just use that formula. Okay. Now leverage profits. This is how it works. So if you're trading with $1,000, if you're in 10%, you make $5. If you're in 20%, you make $10. If you are in 40%, you make $20. If you are in 60%, you make $40. If you're in 80%, you make $80. If you're in 100%, you make $100. That is how the profit is. And you already know that this 100% is equivalent to 5%. You understand? And just like the way I measure here. Okay. So if you move from here to here, 5. Okay. That is 100%. Okay. Yeah, if you're using 20x leverage, don't forget 20x leverage, and you've exposed over $1,000 of your leverage amount in the market, then you use the amount you're going to make. You're going to make $100. So that's how to make $100. Okay, in your futures trading. Now, when it comes to managing, really the money management aspect of it, this is the area I want you to focus on. This area of out of $10,000. You're going to be using just 20% of your capital, and you're only trading one coin. If you have to trade 2 or 3 coins, all the capital you're going to be using, all the money you're going to be using should be under $2,000. Okay, that's how it's been done. So your first entry might be maybe $50. Okay, so let's see, if your first entry is $50, how much of your own fund are you using to trade? So here, just say 50. Okay, now $50, you're only using $2 out of your own fund. Now let's look at something. Now let's use lesser leverage. Okay, let's use 10. Now let's see the difference. Now for 10x leverage, if you're going to be trading with $1,000, 1, 2, 3, okay, then you're going to be exposing $100. You see? So when you're using lesser leverage, you're using more money to trade at the same frequency. Now here, let's use $100. If you're trading with $100, then you'll be using $10 of your fund. Can you see that? Now if you're using $50, if it was 20x, you're gonna be using $5. Can you see that? So understand these things before you come into a conclusion that if you're using higher leverage, you're exposing more money. No, it is the amount you type in here that determines the exposure. Okay, that determines your risk. Now here, $100, let's type $50. 50. Can you see that? $5. But if you're using 20x leverage, if you put $50 here, you're going to be exposing how much? $2. Let's check again. You can see that on 10x is already giving us, for $50, is giving us $5. We're exposing $5 of our own capital. Then if you use 20x, 20, okay. Now the same $50, let's see, 50, okay. Can you see 2.5? dollars. You're exposing out of your capital. Okay. Now, if you're using cross, this money here becomes collateral if the trade goes against you. So because of this money that is in this balance, if my entry, let me show you. Okay, yeah. So if my entry is $20,000, then that simply means if I'm using cross, my liquidation price will not be closed. I hope network is very slow a bit. Okay. But if I'm using isolated, my liquid price will be very, very close. Okay. And that, if anything happens to the market goes against me, I'm out of the market. So most of it, when you're using isolated, you need sniper entry. You don't even need a pullback. If there's any pullback, you're out of the market. Okay, because your liquidation price will be very, very close. I'll probably give example in my next video. So guys, not to make this video to be too long, then continue to follow my content, continue to watch my content. You understand clearly how to trade, how to manage your fund further than this. Okay, so this is not the only video I'm going to create. I'm going to create more videos. So stay tuned. That will be it for this video. Don't forget to subscribe. Please subscribe to this channel, like and share. Share with your loved ones, share with your friends and families. Make sure they understand how all this thing works. Okay, there's no only great strategy. Make sure you are consistent in your strategy. Okay, and my subsequent videos will also teach you how to build your own strategy. Okay, so thank you very much, and I'll see you in the next video. Bye for now.